Let's take a look at some information and charts on Synthetix for Brave New Coin. So Synthetix is essentially a borrowing and lending protocol, even though they consider it, or they categorize it as a derivatives liquidity protocol, which is fine. But essentially you use your SNX to mint derivatives, where SNX is your underlying. Now immediately you run into problems here, because if your underlying is unicollateral and declines in value, you need to continually add SNX as a form of collateral in order to not get liquidated. Eventually you run out of money, and not only do you get liquidated on your synthetic, but it tanks the SNX price. So they're also saying here, currently trialing Ether as an alternative form of collateral. And the interesting problem here is that if we have alternative forms of collateral, that makes the SNX use case significantly less impactful and breaks down the whole system. So it's interesting and sounds good on paper, but how it's worked out so far, much like Maker with unicollateral ETH to mint Psi initially, they've changed that, right? Pretty much for the most part, everything is multi-collateral now. Even Comp and Aave have multi-collateral, or at least multiple options as collateral versus only one thing minting everything, right? And that's part of the bigger issue as well. Not only do you have only SNX as collateral, but you have only SNX minting all of the synthetics. So the moment SNX has an issue, you just get this puke in price on the downside, right? Because you're margin calling everybody. It's just a permanent long squeeze as soon as price goes south. So that's definitely an issue that needs to be shored up sooner rather than later. These are all of their synthetics. You can see a bunch of legacy stuff listed here, a bunch of Forex stuff listed here, mostly crypto. They had, at least initially, inverse synthetics, which tracked the downward price. So you could be long the inverse, essentially. Now, these have been frozen for a while. I don't know if that's due to regulatory reasons or because it doesn't work. I have no idea. But that was poorly timed, because when everything was declining, I would have really loved to be long the inverse on Enzyme, for example. Also interesting regarding the recent Uni delistings, on the Uniswap delistings. If we look at what those were, there are 65 mentions of SNX tokens. So Uni either got a tap on the shoulder or is wise enough to realize that, okay, this is not going to pass regulatory muster in the US, and may eventually mean that this stuff, like Amazon, any synthetic US stock, stuff like this probably doesn't have long to live in the US side of things, because regulators are going to come after this sooner rather than later. That's my guess. And that's why Uni delisted it. And we'll probably see a series of stock delistings on crypto exchanges, including FTX. Binance has already started to do that. So keep that in mind. Just a side tangent, but it's cool that SNX and DeFi can play around with this stuff, but eventually the chickens are going to come home to roost and the regulators are going to come after them. So other than the minting component, they have a staking component. And it's interesting, if I go to my trusty stakingrewards.com, it shows the adjusted reward at negative 22%, whereas the loan is at 7%. And the staking participation is at 50%. So I don't know if any of these numbers are legitimate, but for the most part, Staking Rewards is one site I trust for that information. So it's interesting to see, why would you stake this, right? You're not going to stake it. Pointless. They have a governance component. They're also early on board of ETH 2.0, layer 2 stuff, right? So they're doing a lot of stuff in the background. If we look at the stats, the trading numbers over the past year have been increasing, arguably, certainly since April. Definitely been on the rise. But if we look at the number of trades per day, down significantly to 55. Average daily traders is 30 people on the platform. So certainly not bullish. This is their lending numbers from Aave. And then if we look at where most of the synth stuff is sitting, I don't know how this is in ETH shorts at all, considering it's frozen. But for the most part, most of the money is sitting in ETH, USDC, and BTC. So some of this stuff is still a bit nebulous and weird to me, specifically this binary options thing. This isn't legal in the United States, I don't think. So keep that in mind. I don't know when they added this, maybe just recently, but it doesn't look like it has a very vibrant, robust volume or market anyway, which is good. But hey, at least they're trying to do stuff, right? You can't blame them for that. I think the DeFi people just need to realize that they aren't reinventing the wheel for the most part. This stuff exists in the real world. That's where they get the idea from. They have to check. At the very least, you don't want to get flagged by the SEC or the CFTC, right? You don't want to piss off Gary Gensler or whoever else is coming after you. You don't want to give them a reason to come after you with stuff like that. TVL, according to the bank, is still down pretty considerably from the highs, down considerably from May 18th. But considering SNX is the underlying collateral, this is just going to follow the SNX price. DeFi Llama agrees with that as well, as far as where the TVL is at around 1.8 to 1.84 billion. And here you can see most of it sitting on Ethereum with a small portion of it sitting on layer 2 Optimism. And if we look at the TVL, or market cap over annualized revenue, the PE ratio equivalent, Synthetix, which is more a lending and borrowing category, sits far above Compound Aave, but below Maker. And the legacy people like to use this as just a fundamental metric, basically market cap over fees or revenue, because revenue won't tell you the whole story, market cap won't tell you the whole story, even fully diluted market cap won't necessarily tell you the whole story, because Uniswap has a massive market cap, right? But it's still making massive revenue. So it kind of balances it out. That's one way to get a better picture sort of what's going on here from that perspective. If we look at the SNX token itself, transaction counts down significantly, certainly not bullish. All of these remainder of these fundamental charts are not bullish at all for anything in a vacuum. Average transaction value is just kind of following price. So that's not bullish. Active addresses pretty clearly down, along with number of traders, unique traders, all that stuff. NVT just kind of flat, not bullish or bearish, but in a range, which is fine. But to see transactions and active addresses decline like that, certainly not bullish on the fundamental side of things. MVRV, for most coins, you can say anything over a 2x multiple is close to the top. For SNX, it's probably just too young of a market to really know what's going on here, because for the most part, MVRV has just held steady at like 1.5 to 1. So no real signal there. I always like to look at this to see if there is a signal on these coins. Not always a signal, but sometimes there is. So no signal there. And then on Google Trends, it looks also equally bearish considering it's still declining. And this is just, what is Synthetix? How do I use Synthetix? New money, basically. New people, new interest. It's probably too difficult, just like Maker. If I look at MakerDAO versus Comp or Aave, Comp and Aave, it's stupid simple to supply your collateral and have your loan, right? Maker, it's slightly more involved, a little bit more difficult. And Synthetix, in my opinion, it's probably, the UI just needs a redesign. I think they were working on that anyway. I'm not saying it's not easy to do. I'm just saying the other stuff, in my opinion, is easier to do. Flipping gears to technicals, which are much more bullish than fundamentals, certainly. If I ignore all of the negative I just talked about with SNX, specifically that collateral portion is a big deal. If they go multi-collateral, the SNX use case falls off. If they get hounded by regulators, that's going to be a problem. If they require KYC AML, which eventually all of DeFi will, that's probably going to be a problem. But in the meantime, fundamentals look great, or technicals look great. This is KuCoin on the daily. This is the 1 year MA down here. This is the 5x multiple up here. And historically, it's been real simple. Buy zone in the green, sell zone in the red. Gives you a few days to get out in the top. Some coins, you get multiple weeks to get out. Some coins don't have a signal at all, but this one, as an oscillator, is about as clear as you're going to get. And not only that, but you're getting this Adam and Eve at the bottom here. So this very likely has a high probability of going to 50, 60, even 70 over the next 6 months, right? Now, again, if regulatory stuff comes down on this, all bets are off. But just based on technicals, this could 5 to 6x in the next 6 months. I think that's pretty reasonable based on the signal that I'm seeing here. And just to compare to something, this is Tesla on the 365 MA multiplier, and you saw something very similar at the bottom of that run. Obviously, this is much different and crazier in different ways, but it is very similar to what this setup is looking like for me here with upside potential. I mean, it's pretty simple, right? Buy zone, midline, sell zone. So let me know in a couple months how that looks. I'll look at it every month and we'll talk about it. But to me, it looks pretty clear. This is the daily chart. Again, on KuCoin, you can't trust the volume here. It's fake. It's fake because it is irregular all over the place at times, super regular other times, makes no sense, right? So the VPVR is less impactful and the daily volumes are less impactful. Still worth paying attention to, but just keep that in mind, right? I'm only using this chart because it's got the most price history. It was listed on KuCoin before anywhere else. So here's the Adam and Eve again, and you have the bullish 5200 cross. You have a bunch of monthly pivots on the way up, but ultimately this immediate consolidation should lead to 18 to 20. And then beyond that, this will take some time, most likely. But this looks good for bullish continuation. Even reading this from VPVR level to VPVR level, so support to resistance. I like a little less than a 2x from here. Looking at it on Binance just to show the volume difference. Even Binance can't really be trusted, to be honest. They also have, we'll say, interesting practices related to fake volume stuff, but this also is painting more significant resistance between 18 to 21. And as it gets higher and higher and higher, you got to watch for your bearish divergences. Just like here, it took a month about to get the eventual top here. But when you got it, it's pretty clear. And SNX on all of DeFi has this very technical behavior to it, where if you see a divergence, it's probably real. If you see a bullish divergence, it's probably real. If you see a pattern, it's probably real. If you see a death cross, it's probably real. And if you see the inverse of all those things, then they're probably real. So seeing this multi-month A&E, Adam and Eve, is super bullish for me. Pending golden cross, super bullish. Just watch for this in the coming weeks for a pullback, right? That's one of the big tells that the top is in, when you get a higher high in price and a lower high on RSI on the daily. SNX-BTC looks like a hot mess since July 2020. It's basically been in a range. So you can either trade that as buy the low, sell the highs, or hope for some sort of chart pattern or something. I don't know. I would never trade this directly. It's too much of a mess. I don't really see anything here necessarily. It just looks bearish to neutral. I don't know. No idea, honestly. And again, volume on KuCoin is completely not real. So keep that in mind when you're looking at the volumes for this. And when you're looking at the VPVR for this. SNX ETH is a little bit more clear cut in that it is potentially forming an inverted head and shoulders here with a triple bottom bullish divergence growing in the previous 2020 low. So if you are a real risk taker, you're starting to add to SNX relative to ETH. And there are, or have been, a series of bottomy type patterns here. You could argue Adam and Eve here, or W before this blast off. Adam and Eve definitely here. And then this one's a more broad inverted head and shoulders with the diag. Just flipping back to USDT again on the cloud, this is painting 16 on the daily. Bullish TK cross, flat Kumo. This is a 50% retracement from high to low at 16. And then on the 12-hour, it's also telling you bullish Kumo breakout, bullish TK cross, bullish cloud, and the lagging span not yet above price, but typically these three factors are good enough for a long trade at that point in time. So fundamentals highly vulnerable to regulations and anything they change with the collateral, but technicals look great. Technicals honestly look amazing, maybe better than anything in DeFi right now, because a lot of stuff has already moved or reached close to its initial consolidation target. So, rotating out of some other stuff into this isn't a terrible idea. Not investment advice, but just that's one way you could play it. Last, I'll mention my ETH-BTC fund and DeFi portfolio, I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see AUM, allocations, performance, all the trades I make in the trades tab here, all the deposits and withdrawals from various wallets, as well as any of the yield plays I'm in on the DeFi side of things. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.